Hello, everybody, and welcome to part two of Own the Game, building a financing machine that sells for you. Now, we are 2 minutes before the start of the webinar, so great job in joining early. If you are here, here's what you need to know. Number one, we're going to start about 3-4 minutes from now to give everybody a chance to join in. If you don't have something to write with and write on by you, you are going to want something to write with and write on during this part two, because we are going to deep dive into some really juicy questions, and we're going to give you actionable takeaways on how you fit financing into your everyday pricing. So buckle up, get ready, grab something to write with and something to write on, maybe grab something to drink, because you're going to be salivating for how this is going to help you grow your bottom line. So stay tuned. You're here, you're in the right place. We're just going to wait a couple minutes for others to join so we can go ahead and get started. And I'm not singing for you during our intermission here or our waiting music, but thank you for making time on this Thursday. We will be recording this, so there will be a recording of this available after the Lunch and Learn as well. I'm going to be quiet a minute now. For those of you who were on part one, you may notice that Justin Hatcher looks a little different today. Justin, I had to. Justin Hatcher today is Bill Wilcombe, and Bill is utterly amazing. I will give Bill a brief intro in just a moment. And believe me, you are in for a treat hearing from Bill today. So for those of you who are just joining, welcome to part two, Own the Game, build a financing machine that sells for you. We are going to get started in the next minute or two. Here are some running rules. Running rule number one, you will likely want something to write with. So I strongly recommend getting a pen and paper, get a crayon, get a marker. I don't care. Whatever you like to write with, type it in your phone, whatever note taking you like. I recommend you grab that, because we're going to dole out some really great information today. Also today in part two, we're going to go over things including, and most exciting, how to build financing into your everyday rates. This is always something we get lots of questions on. And our expert we have joining us here today is not Justin Hatcher. We brought in a different expert for you this time. You will see on the screen Mr. Bill Wilcombe. Bill is so humble and so kind that he doesn't talk about himself enough. So I'm going to talk about him real quick and give him an introduction before we dive into the juice. Again, I am your host in the questions today, Jennifer Lau Hatcher, co-founder of One and Fund, fintech and lending expert coming from the lending side of the things. I know, don't hold it against me. I saw the light. I'm on the right side now. And with me again, we have Bill Wilcombe. So Bill has carried the bag. He has sat at the kitchen table. Bill has been a sales manager, leading teams all over the country, mostly here in Northeast Wisconsin. You would recognize Bill from Tundra Land Home Improvements, where he helped build them to an extraordinary number that I'm not even going to tell you because it's that big, but it's where we all want to be. So Bill, with that very simple intro, is there anything you want to add?
No, I think that pretty much sums it up. It's one of those things where, selfishly, whenever I was working with a lender, they would always offer to do sales training, and I was that manager that said,
No,
no, I'll
absolutely
train
not.
me, I'll train them. Because I would ask them, have you ever sat at the kitchen table? Have you ever sold in the home? And there was never an opportunity where they told me that they were able to have sat in the home. So it's a different perspective. Again, being on this side of the industry now, and then being able to help a bunch of dealers offer financing and sell more financing in the home.
Absolutely. Okay, so are we ready to dive into today's topic?
Absolutely.
All right, so Cass, if you can hit us on the next slide, we're going to dive right into it. Again, if you have something to write with, perfect. Can we go backwards maybe? Yes, perfect. Thank you. Okay. So if you have something to write with, perfect. If you don't, that's okay. You will want to get it before we get to number 6, diagnostic check. So if you were with us for part 1, we went through 4 diagnostic questions, including things like, are you marketing for financing? It's really, really important. You need to start at the very, very beginning of that sales cycle before they're even calling into your call center. Now, I'm not going to reiterate all of that on this one because our time is short and sweet, but you can access the recording of session 1, Lunch and Learn, if you would like to. We are now on session 2 where we're going to dive deeper. And what we're starting with today, and kind of that cliffhanger we left with last time, is your team focused on rates or payments? Now, before I have Bill in his deep, deep subject matter expertise talk about this a little bit more, I want to remind you also, we had talked about procedures. And does everybody know the procedure for offering financing, things like this? This would be one of those that kind of ties to that consistency of what are people doing. Okay, Bill, I'm going to be quiet. I'm passing it over to you. Why does it matter if my team is focused on rates or payments?
I think I think it's a great question because I think the biggest thing is understanding really the why for our consumers and the why for our customers. And the fact is that our customers and consumers this day and age are more conditioned now to purchase off monthly payments than ever before. Not even necessarily knowing I mean, it's such that they're being offered monthly payments without even necessarily knowing what the rates are. They'll find that out and they understand that once they, go through the terms and conditions of the truth in lending, things like that. But they're more concerned of, can I make this payment? Will this payment fit my budget? It's funny to see these things that are right in front of us. If you've ever bought anything on Amazon, right?
Right.
You bought anything on Amazon, you got 2 ways to pay. You can pay with your debit or credit card the way that it is, or you can put, your entire cart on 3 easy payments. Right. So you're able to make those payments. I like to make the joke. You can buy this beautiful sweatshirt on Amazon for 3 easy payments. It's being conditioned for our customers right there in front of us. And it's when we're in the home with our customers, our number one goal is to help our customers find their path of affordability. A lot of times that's going to be through the form of a monthly payment. It's
Absolutely.
another thing. I was having a conversation with a team the other I think it was 2 weeks ago, and I asked them. I had everybody raise their hand when I asked them who in here is subscribed to whether it's Audible, Netflix, Disney Plus, ESPN, any type of streaming device or streaming service. Sorry, and then I asked them. They all raised their hand. I asked them, how do you guys pay for it? It's a monthly payment. Right.
Absolutely.
So our consumers and we are all conditioned to focus and pay on monthly payments more than ever before. So it's very important to focus more on the payment aspect, on that customer's path of affordability, than necessarily on the rates. Because again, there's no penalty for early payoff, so they can pay it off a lot quicker if they wanted to. But it's important to help that customer find their path of affordability, and majority of the time it's going to be with a monthly payment.
100%. And we know I always like to layer in facts, right? So here I'm coming in with the fact. There was a recent study that over 80% of Americans have less than $2,500 in their savings. Okay, so if an American, that's your customers, has less than $2,500 in their savings, how are they giving you cash for your project that's 15, 20, 35, 80K? Even if it's $7,000, if we're not offering payment options, we are actually taking away their, as Bill said, path to affordability. Our job is to make it easy for them. And the other thing I wanted to layer on is that this is a personal thing of mine. It's like one of those Gen pet peeves. If we had a list of the top five, this is in my top five. Once upon a time, in the sales world, it was normal to lead with rate and be like, oh, Mr. and Mrs. Jones, let's get you down for this great, 6.99, whatever. However, that was a long time ago. We don't live in that world anymore. And if your teams are still leading with rate, you are doing a disservice to not only your homeowner, but also to your rep. Because number one, rates are volatile. Banks can change them anytime they want, and they do. So if we're leading with rate, we could be misleading on what they can get. And even more than that, we as reps in the home have no idea what that homeowner's apply for. You don't know what their credit score is. They can tell you what they think it is, but until that soft pull credit app, at least on one look, it's a soft pull credit app, until that credit app goes in, we really don't know what they qualify for. And so if you're leading with rate, you may be misleading in what you're actually able to get them. And that's not up to you. That's up to the lenders on
Yep.
the back end, right? And so, Bill, I know that's a pitfall people often fall
Yep.
into, and then they're scrambling because homeowners expecting this rate, and that's not what they got qualified for. Do you want
Correct.
to layer on that at all?
Yeah,
Because
so I was thinking too, is kind of give some insight on something that we did with our team at Land too was I typically gave about three plans for our team to offer. I kept it really simple for them to understand. And I know you guys talked about marketing. How do we market it on the last call? The number one plan that we would market is the 12-month no interest, no payment, right? That one would get the phone to ring, right? But then what we would train our team to do is to focus on monthly payments, because a customer would have this perceived value of how much it's going to be. And typically it's, I'm sure we've all run into this, but typically it's about 2 to 3 times of what their perceived value was before we got there, right? So they're thinking, yeah, I can do this in 12 months. Yeah, no interest sounds great. But then they start to realize that they picked out a premium color, that they picked out a premium product, that they wanted all the bells and whistle. Now we're starting to think that this is probably going to be a little bit more than we were thinking. I hope they have a path of affordability for me. And that's typically going to come in the form of a monthly payment. And then also when you focus on monthly payments too, and we're going to get into this in a little bit here, typically the dealer fees are a little bit more softer for the dealer when you start to focus on those term loans, which is really nice.
absolutely. And I'm going to share a personal story here really quick because I think we have time and it's relevant. I'm in the industry. We eat, live, breathe, talk this every single day of our life. For those who weren't on number one, Justin Hatcher is my husband and we co-founded One of Fun. Like again, eat, live, and breathe home improvement remodeling services every day. I had a quote at my house for a 3-season room. And even in my head, I'm like, okay, I think it's going to be this. I'm going to add 30% to that number. Guess what? What I designed, because I'm one of those customers who has really exceptional taste. What I designed was 30% over my buffer price in my head. Now, was I surprised? Not really, because that's who I am and like premium, whatever. But there was absolutely no way I was writing a check for this. And the options this company had at the time for financing for that size of project didn't make sense. It was still going to be like $1,200 or $1,300 a month, which is a lot of money. You have very few homeowners who are going to be like, yeah, I'm cool with an extra $1,300 a month payment. Throw it at me. So having the right type of offerings for your product is also really, really important.
like I said, the plan that we marketed was the 12-month no interest no payment because that got the phone to ring, right? It was
Right.
important to market that one. The number one plan that we sold was a 10-year 9.99% interest. That was the number one plan because it made that monthly payment affordable for those homeowners. And ironically too, that was our number one payment. I actually became a customer of Tundra Lands 5 years before I started working for them, which was a fun story, right? And the plan that my wife and I chose was the 10-year 9.99. And it wasn't because we wanted to pay on anything for 10 years. It gave us an affordable monthly minimum that we could, fall back on just in case life happened to us because we were newly married. We just bought a house, just got a dog. There's some expensive things that could be coming in the near future for us, right? So just in case life happened to us, we were going to be okay. And we ended up paying off that loan in 3 years, so we were good to go. We only paid that 3 years worth of interest. Totally fine. That was exactly what we were hoping for. But just in case, we actually looked at that interest as almost more of an insurance plan that if life happened to us, we were okay.
Bill, I'm really glad you brought that up. And then after I comment on this, let's jump to 6. Not quite yet, but just in a second, because there's a lot of homeowners right now that are exactly at that place, right? There's a ton of millennial people who are doing that part of life right now, and they're often buying homes that are requiring some sort of renovation or work because they couldn't buy that dream home they wanted out of the gate, right? So I'm really glad you brought that up, and that's a really good point on connecting with our customers where they're at. And it just happens to be that there's a big demographic there right now, but also that you paid it off in 3 years
Yep.
because there's a huge statistic, and I don't remember it exactly right now. I want to say it's like 86%. It's really high of homeowners when they do term loans pay them off in that period or before the promo period ends. Like it's whatever XYZ is. I'm not quoting it exactly, so don't hold me to that, but it's a really high number of who pays it off early. And that is very normal. A lot of times we on the side of the table who's trying to get the job done is like, oh my gosh, 10 years. Like there's all this head trash running in the background of how long it's going to take people to pay off. And that's really not accurate. And so being comfortable with those longer terms should be
Yes.
something people work on because they are getting
Yes.
paid off. And it's, you don't need to worry about people taking 10 years to pay it off. Kind
Well,
of.
and that's the thing, and last little thing on this topic too is, we paid it off in 3 years, but again, we chose that plan because we felt like it was an insurance plan that if life happened, we were going to be okay. Like no matter what, we could make that monthly minimum. Think about what happened to all of us within the last 5 years. Take a look at your own, life and see what has happened in the last 5 years. It's only 5 years ago that the pandemic was underway, right? So it seems a lot longer, but it's not that long ago. So, it's nice to have that fallback of just in case we're okay.
Yeah, I don't want to talk about my stocks in the last 5 months. So let's go right on ahead to diagnostic number 6. Here's what you've been waiting for, friends. Here is the juice. Now, this is a yes or no. You can answer it for yourself. Hey, if you want, answer it out loud. Go for it because I can't hear you. But the question is, do you have the cost of financing built into your everyday rates? Before I pass it over to Bill, because he does an amazing job breaking this down and taking you through it, before I pass you over to Bill, what I want you to know is that for many, many contractors, the answer to this question is no. And I want you to give yourself grace, and that's okay because that's why you're here. And we're going to help you build it into your everyday rates. And Bill's going to give you the why of that's important as well. So, Bill, it is all yours.
So I'll start with the why, and then Cass will be able to go to the next slide too to break it down. But the why is this is another service that you are able to provide your homeowner. If you take a look at what you are offering your homeowner, not just a product, right? You're offering them a home improvement experience. Part of that experience is getting to that path of affordability and offering them a payment that they can afford, or their dream shower that they can afford, whatever that might be. So this is another service that you're providing as a part of the experience that you're giving your homeowner. So you should cost this in and help your customers, right? So that's what I always recommend. When I was at Tungeline, we essentially took across the board, we took about an 8% price increase to help cover those costs, right? That way, depending on if we offered a plan that was maybe a little more cost effective, we were able to just run as normal. If we used a plan that was a little less cost effective, we still offered our customer the same exact price because we wanted to make sure that we were offering fair and honest price for the project that the customer was purchasing. And you can't charge your customer the specific fee, but you can take a price increase to offer the service.
And
Okay.
I will tell
Yeah,
you
go
from a
ahead.
lender perspective, and particularly in some states, it is not only not a good idea, but in some states, it is illegal to pass those fees on to your customers. So you want to be very cognizant and thoughtful of that as well, of like, why
Correct.
are we punishing them because they chose to buy from us?
Right.
Okay.
Yes, if you want to go to the next slide. Perfect. So we're gonna show you just an example of how to cost this into your P&L. We're going to talk about credit cards too, because really credit cards essentially are a form of financing, right? So we'll start there, and then I'll give you guys an example of how this can all cost in. So credit cards, typically fees are right around that 3% mark, maybe give or take a little bit. But we're gonna pretend that they're 2.89%, right? So credit card fees are 2.89%, but they only apply for about 10% of the sales. So to find this overall impact on our sales, we take the 2.89% and multiply it by 10% to get the 0.289%. So this means that credit card fees are contributing to only 0.289% of our total cost. Okay, so there's that first number.
Side note,
Okay,
we do offer credit card fees at 2.89. So if you are paying
correct.
more, you need to come talk to us.
Correct. Yes, can you hit the next one? So now we'll talk our financing fees. Financing fees, we're going to say they're about take a look at like I said, I used the three plans that were my most popular ones at Tungeland. My average fee would have been, for this example, 8%. So they apply to 50% of our sales because we would finance 50% in this example. To find that overall impact on our sales, we would take our 8% financing fee or dealer fee, multiply it by 50%, and that would equal 4%. So meaning that our financing is now contributing to 4% of our total cost. And then lastly, we want to make sure that we're adding in the contributions. So this would be the next one, Cass, if you want to hit next. But we want to combine the contributions for both fees to the total impact of the project. So it would be the 0.289% plus 4%, giving us the total of the 4.289%. So now, if we want to take a look at what we would have to do as a dealer to take a price increase to offer financing and have it costed in, we would increase our prices by approximately 5% to cover the fees and maintain that profitability across all sales. So we're talking a minimal 5% increase if your average dealer fee is about 8%, and you never have to worry about, essentially getting hit too hard on those dealer fees because you costed it into your service. So when we're talking, 5% increase, we're really not talking about too much to be able to offer a whole nother line of service to your customers, which is really nice.
So Bill, if somebody pays cash, is it the same price?
It's going to be the same price.
Why?
Because if somebody pays cash now at this point, you're able to take that extra profit that you received and stick it into your marketing, now driving your marketing costs down as well too. Or if a customer, say maybe you ran a promotion, you ran a plan that was maybe a little more expensive than that 8%, maybe it had a 10 or 12% fee just to, as a lever of influence to get, the phone to ring a little bit more. Now, if you took a deal or two that with a higher dealer fee, you're able to make it up with that little bit of profit where somebody get paid cash. So now your P&L comes out looking really nice.
Absolutely. And I want to give another head trash moment here. This is another spot where we will be in conversations or we'll be live doing this on stage, and somebody will raise their hand and be like, I can't raise my prices 5%. It's so competitive in my area. I won't get any jobs sold. And that is head trash. And I am telling you that if you hear, I'm going to reference Scott Berman because I hear him say this all the time too. Like if you feel like 5% is not going to like get your sales done, that is complete head trash. And that is on you. That is not on your customer. And that comes
Yep.
back to how are you selling the value of your product? 5% is not going to break your business. In this instance, that 5% actually helps your business because you're
Right.
making it easier for that person to purchase your products and
Absolutely.
get your expertise of your team installing it.
Absolutely. I always challenge my team anytime we had a price increase or anything like that. I'm like, hey, you just need to go out and build 5% more value today. Right? It sounds minimal, right? And really that's truly all you have to do is build a little bit more value, and you're doing that by offering that path of affordability to your customer. If you're that's more than 5% value, in my opinion, that you're able to offer your customers. But really in this scenario, to add in your credit card fees, to add in your dealer fees here, you'd have to take a 5% price increase.
Yes. And again, 8%, averaging 8% on finance fees. When you're looking at first look lenders and second look lenders, typically rates on a second look or third look type loan are going to be a little bit higher. They come with more risk. There's all of that. We have to remember these are unsecured loans. These are fast, easy, instant approval, unsecured loans up
Yep.
to 100, 125K. So there is going to be a, not always, but if you take all of your projects and you're financing industry best practice, 65 plus percent of your jobs, then there's going to be some fees somewhere. Now, are there lots of no fee plans? There are. And we can talk about that a different time. But um, let's move on. I want to be thoughtful with time. Cass, let's jump into the next slide because this is kind of what I'm talking about too. So we've delivered this great information. Again, we have the experts from multiple sides of the aisles here to talk about it. Why are you talking about it? Why do I care? We're talking about it because we do have the proprietary patent pending one look platform that was built by home improvement experts for home improvement experts. We literally built this platform to solve for the pain points for your reps while they're sitting at the kitchen table trying to get that job on the books. We built this platform so that there would be a single login, one process, regardless of how many or what lenders you have on the back end. So we do have a single pull app for first through third look applications. There is a study that shows that in the real world, only 42% of credit declines are getting a second look. Only 42%. That is the best of the best. On the one look platform, every single application has that opportunity at a first or if needed, second and third look. Every single application has the highest chance of approvals possible. But what's even more important than that is that on the one look platform, we have an 11% higher take rate than going direct to the lender. Bill, what does take rate mean? Why am I really excited about 11%?
So take rate is full transparency, a KPI I wish I paid more attention to when I was
Uh,
running my team. So that's what take rate is. It's a sore spot for me. No, take rate is let me back up for a second. We've always focused so much on, I need my approvals. I need the most approvals. I need all the approvals. Give me the approvals. It doesn't really matter if your customer doesn't take the deal, right? So once you get the approval, you need your customer to take the deal. There might be some times where, maybe it's a second look lender, interest rates a little bit higher, right? And your customer might be a little bit more apt to want to take that deal. This is where we can also help out with some training and provide that extra training to help the sales team take some more of those deals that you wouldn't have normally gotten. It's a KPI I wish I would have tracked more. But my eyes have been opened up to it, and I don't want anybody else to miss out on a high take rate. So that's what take rate is.
Yes. So 11% more signed projects on your calendar. And I don't know a contractor today who doesn't want that. Couple other things. We have Bill and other experts on the team that can help coach and support as desired. And we have live chat. Remember the days, and you're probably going through these days right now if you're not on One Look, where you have to call into the lender when you have a question, and then you're pressing like 14 different prompts and you're sweating because you're waiting to talk to somebody, and then you have to talk to somebody and it's really uncomfortable. Yeah, we eliminated that. We have a live chat with real humans that is right there on whatever device you're using. So it's totally normalized to get the support and help you need. And again, that's for any lender that's on the One Look platform. So it doesn't matter. Everything is normalized and simple and an easy process for both the front end, that rep in the home, and the back end, your accounting team that's trying to pull funding and all of those fun things. So the only other thing I wanted to say on this slide before we jump to the next one or the last one is that it's really important that you work with lenders who specialize in home improvement. You can have 14 different lenders, but if they don't specialize in home improvement, if they're not a variety of first, second, and third look lenders, if they're not going to approve you for full project amount, it doesn't matter. And so we have been very thoughtful and very specific with that. All right, Cass, can we jump to the next slide real quick, which I think I probably talked about, because if we don't feel it, we're all super passionate about this. And then let's jump to that last slide, please. So if you're still listening, which we hope you are, and you have questions, you want to learn more, by all means, scan that QR code, hit us on the website, hit one of our socials on LinkedIn or Facebook, connect with us in whatever methodology works best for you. Our team would love to learn more about your business so we can understand how we would fit into your sales process and can help you close more projects, bigger projects, lower your cancellation rate, and of course, grow your bottom line in ways that you didn't even see coming this year. Bill, have I missed anything super critical?
I think we're good.
Okay. Everybody, thank you for joining us today for part 2 of Own the Game, building a financing machine that works for you here at One Click Contractor / One in Fund family. We are grateful you are here and we are happy to help out however we can. Thank you for making the time.